Hi friends, we have seen some pretty big moves in the market recently, which means grid martingale expert advisors like the Waka Waka have seen some pretty big drawdowns. So today I wanted to explore 3 different ways that we can make grid martingale expert advisor, particularly the Waka Waka expert advisor, safer. Before we can get started on backtesting, we first need to establish if backtesting is as accurate as forward testing. So here I've got a FX Blue link, which is my real account, which has been trading since the 1st of February 2023 till about the early April 2024. This is trading at 0.01 lot size on my Go Markets broker, and I can see 2 reasonably big drawdown points. First was end of October 2023, where I intervened manually and closed all trades at about a $300 loss. And most recently at the end of March 2024, we saw a big trend and big drawdowns in this expert advisor. Now I'm here on my IC Markets MT5 terminal. So notice that this is MT5, not MT4, and it's a totally different broker. So we're not really comparing apples for apples, but this should be good enough, because IC Markets demo data is pretty good. So I'm testing Waka Waka version 4.43 as of recording. This is the current version, and we're just going to be backtesting over the same time period, the 1st of February 2023 till today. And for the inputs, I've changed it to fixed lot at 0.01, which is exactly the same as my forward testing. And if we take a look at the backtesting, remember this one is a USD account, whereas my live account was an AUD account, so you'll see different results. First of all, we're looking at a net profit of $81 and a equity maximum drawdown of 931. That is because of the reasonably big drawdown we saw towards the end of the trading period. But what we're looking for in this equity chart is the 2 big moves that we saw in our live account. So in our live account, we saw a pretty big drawdown of the end of October. So you can see that here. And more recently, you can see here. So approximately, if we're looking at comparing the back test versus the forward test, it's very similar enough. The first test that I want to run is to split up the different currencies. This expert advisor runs on 3 different currencies, so I'm going to run them individually and see where the weak points are in these currencies. To kick things off, let's start with the Aussie CAD, and I'm testing here from the 1st of January 2020 till today, so about just over 4 years. I'm using 100 millisecond delay with every tick based on real data. And for the inputs, I've just got the Aussie CAD down here, and at the top I've changed it to fixed lot at 0.1 lot size. Backtesting is done, and we've made a profit of about $9,000 with a maximum drawdown of 1,900. And if we look at the graph, it's reasonably smooth with very small minor bits of drawdown. From a lot sizing perspective, I can see a 1 trade with 2.04 lots, and this is Waka number 6, and 4 trades labeled as Waka number 5 with lot size 1.28. Next, we've got the New Zealand Canadian over the same time period and the exact same settings. The New Zealand Canadian made slightly less profit at $8,900 and a drawdown of $1,456. And here is the equity chart. I would say it's pretty smooth with just a few points of a drawdown. From a lot sizing perspective, this one did slightly better because we haven't seen any trades where the volume is greater than 1 lot, and we've seen a maximum of 4 trades, Waka number 5 label at 1.28 lots. The Aussie New Zealand is the worst performing pair out of the 3. If we take a look at the backtest, you can see the net profit is only $1,400 and the drawdown is a massive $9,000 based on trading and closing all trades at the end of the 12th of April 2024, because if you look at the chart, you can see a reasonably big drawdown because we have forced all the trades closed at the end of the trading period. And apart from that big drawdown, we can see 2 different periods of big drawdown. If you take a look at the lot sizing, we can see a trade with 5.24 lots with a description Waka number 8. Aside from that, I can see 2 other trades here with 1.28 lots back in 2021 and 2023. The thing is, every time you run a backtest, you will get different results because of the value of the currency changes every single day. So yesterday, when I ran this backtest, I also saw reasonably big lot sizes on the Aussie New Zealand, and I will post the results here on the screen. What this tells me is that the Aussie New Zealand pair is the weakest out of the three. So if you wanted to reduce your drawdown, one option is to take this pair out of your trading completely. Idea number 2 is to reduce the maximum number of allowed open trades in the Waka Waka settings. The current default value is 9, so you can have up to 9 open trades at one time. So here is a backtest from the 1st of January 2020 to today, and I'm using fixed lots at 0.1 lots. And I'm using all the different currency pairs, Aussie New Zealand, Aussie CAD, and New Zealand CAD. And I've kept everything default. And the maximum trades, which is default, is set to 9. So if we take a look at the backtest results, we've made a total profit of $16,000, and our maximum drawdown is about $9,000 because of the current big drawdown in the charts. Aside from that, all the other drawdowns seem pretty reasonable, with the other biggest drawdown we mentioned before was the October the 10th of 2023. I've screenshotted those results. Next, I'm going to go and change the maximum trades from 9 up to 4 and hit start. Backtesting has completed, and you'll notice the net profit now is up at 18,900, which is an increase over the previous test, about 2,800. And the drawdown maximum is now at 1,900, whereas previously it was 9,000. And if we look at the graph, it is reasonably smooth, and there is no huge drawdown at the end. There is a slight dip because we do have currently open trades that are being closed at and forced closed at the end. And notice, remember that we had a reasonably big drawdown here back in the October the 2023. So this one is much smaller. However, back in May, we'll see a reasonably long drawdown. This looks about a month and a half of drawdown because we are limiting our trading. But overall, it does seem to make an improvement over profitability and drawdown. And if we head over to deals and again sort by volume, because we want to see what we've seen in the past, which should be 0.4 because we have limited up to 4 trades only. The third example is to use small accounts, and this might sound counterintuitive, especially since Grid Martingale expert advisors can have a huge drawdowns, but let me explain. Let's say you have a $10,000 or $50,000 account and you want to be safe, so you choose either low risk settings or medium risk settings with a Waka Waka on your primary account. However, unless you've got a set equity protection in place, you are effectively risking your whole account. Because when we see huge trends in the markets, the drawdowns can grow really, really dramatic and really, really quickly. And whenever your equity protection is hit, let's say it's 5% or 10%, whatever you set it up to, it can take months for you to come out of that drawdown. So the idea here is, instead of using the entire $10,000 or $50,000 that you've got, you take a small portion of that and trade super aggressively. So let's take a look at an example. Let's pretend you have $10,000, but you don't want to risk all $10,000. What if you only wanted to risk $500? So this is my crazy Waka $500 experiment. We start with $500, and when the equity reaches $1,000, which means we've doubled our account, we withdraw $500 and start again. And our max floating loss is $500. Here I'm testing on IC Markets M25, and I'm trading very aggressively at 0.01 lots per $50. To test this idea, I've highlighted the key settings in yellow. You've got dynamic lots based on balance, 0.01 for every $50. Tester will draw $1,000 and we're withdrawing $500. And at the bottom, max floating drawdown is $500. And here are the screenshots I took earlier of my back testing. You can see we started off with $500, and every time it hits above the $1,000 line, that means we are withdrawing. If you see a sharp drop below the $1,000 line, that means we have hit drawdown. I can see we've hit drawdown 3 times, 1, 2, and 3, and I've marked it in the red crosses, and the yellow dots are when I think we've done a withdrawal. And if you take a look at the back testing, you can see total net profit of $5,122. And obviously the maximum drawdown we've seen is 751, which is this last bit here where we've pretty much blown our account. That is my crazy Waka Waka $500 experiment. Can we go even lower? Let's say $100? Introducing the crazy Waka $100 experiment. We're starting off at $100, and when our equity doubles to $200, we're going to withdraw $100, and the maximum floating loss allowed is $100. Here I'm testing on IC Markets MT5 0.01 lots per $50. And the settings are exactly the same as before. Here we're substituting a test of withdrawal for $200, withdrawal amount as $100, and maximum floating drawdown as $100. And the results of that Waka Waka $100 experiment looks like we're hitting it drawdown 1, 2, 3, 4 times, and the rest of the yellow highlights take profits. So according to this back test, $980 is in profit, and our maximum drawdown is $117. 3 ideas on how you can reduce the risk for Grid and Martingale Expert Advisor like the Waka Waka. The first one is to remove the Aussie New Zealand because that one historically has performed the worst. The second idea is to reduce the grid and only allow a maximum of 4 trades at any one time. The third option, and my personal favorite, is instead of trading all your money, just trade a small portion of it and trade very aggressively with the expectation that occasionally you have a blown account. And I'll be testing this theory a lot more detail in the next coming months, so stay tuned for those videos. For full transparency, these are not my ideas, but ideas I grabbed from other members of my Patreon, and I went a little bit further than the comments that were provided, and I did additional backtesting to verify that they were sound. But I wanted to give credit where credit is due because there are some really smart people in the Patreon.